Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly demand and support area. From here, in fact, all these previous rejections to the upside have been created. Every single time that the market tested this zone, it got rejected to the upside quite aggressively. So what we could expect here is potentially to see more bullish continuation being created away from this area once again, as already happened in the past, every time that the market tested this exact same level. So on the monthly, the market is currently rejecting historical support and demand, and more bullish price action could be expected. Let's drop down on the weekly time frame and see what we have. Well, from a weekly standpoint, the situation is quite clear. First, we had the creation of this W formation, and as I explained many times, after the creation of a W, what you would expect is for the market to create a rejection to the downside to go and complete the W formation at the neckline, so at the previous resistance turn support, and then to see the continuation to the upside. That is how most of the times this pattern plays out. And in fact, we can see that so far that is exactly what the market has been doing. First, we had the correction at the neckline. The market went and completed the pattern at the neckline, and now it is already starting the continuation to the upside. So from a monthly standpoint, more bullish price action could be expected away from this zone, as you would expect usually in a situation like this. We can also notice that from a structure standpoint, the neckline of a W formation is by definition previous resistance turn support, and also from a pattern standpoint, as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up precisely with this previous resistance turn support, therefore creating confluence of support inside of this area. Because if you have multiple layers of support in the same zone of price, that creates confluence of support. And inside of a confluence of support area, you have an increased probability of getting institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. And we will be looking at what institutions are doing later on when we move to the commitment of traders analysis. For now, let's drop down on the daily time frame and see what we have. Now, from a daily standpoint, the situation is quite clear. We just had a massive impulse to the upside that created this W formation. And after the creation of a W, what we could expect, as we said previously, is first a correction at the neckline and completion, and then the continuation to the upside. So if the market will here correct to the neckline area, that is where things would get quite interesting, because at that point, there is a good probability of seeing more institutional longing that potentially could push this price higher. Now, why do I say more institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and if we look at the data precisely for the NZD, the first thing that we have to keep in mind is that if we're looking at the data for the NZD, we're actually already looking at NZDUSD, because all currencies on the spot are traded against the USD. And if we look here at the net positioning, we can see how we went from having a negative net positioning of minus 13.5k net positions, so with more shorts than longs, 27.2k shorts compared to only 13.7k longs, all the way up to now having a positive net positioning of plus 26.6k net positions with the complete opposite. So more longs than shorts, 43.7k longs compared to only 17k shorts, making NZDUSD quite strong. And that increases the probabilities of seeing more institutional longing inside of that area that we have just identified, because already institutions are longing and moving back to the bullish side for this market. So let's keep that in mind and move back to the analysis. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, as the market has retraced to this level, if the market, will retrace to this level, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.